Hello, traders. It's Tuesday, the 10th of September 2019. It is 8:02 a.m. Chicago time. Thanks for joining me for episode number 1592. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall sentiment, unlike yesterday, is the opposite, really, is risk off. The markets are off a little bit. Um, uh, the markets are off on risk. Um, uh, the leader, however, is still crude oil. Crude oil broke above, just slightly above its balance zone since I think mid-July, taking out the 57 and a quarter composite point of control and holding above there today. The DAX is higher this morning, unlike the other indices. Um, Unlike the other indices, it's up 39.5 points or 0.32%. From there, the laggard is gold. Gold has fallen quite a bit from about $1,560, trading at $1,501.80, off 0.62%. The Nasdaq's the weakest this morning, down 27 points or 0.34% from settlement. So again, risk off. The sell-off yesterday was an impulsive move. Where we left it, we'll go over this. We actually left the S&Ps. If you're a part of Convergent, you probably saw that I was posting about the closing trade setup around 1980 for a rotation back down to 1976 and a potential push. And then the market the ES just basically closed in that area, taking away that trade. So that's how things are setting up. In terms of what's ahead, we don't really have much ahead of us. We have the JOLTS job openings, which is a lower tier, a lower impact figure at 10 o'clock. And then after the close, we have API crude oil stock changes at 4:30 Eastern. There's not much to say about the market this morning. The futures major indices fell along with European and Chinese stocks as disappointing China factory data stoked recession worries. The Japanese yen held at 5-week low versus the greenback on firming government bond yields. Optimism that OPEC and other producing countries may agree to extend output cuts supported oil prices. Gold dropped to near a 1-month low to hold below the key $1,500 pivot, hit by a stronger dollar. That's how things are set up currently. Let's take a look at what was expected yesterday. Let's move to our review segment. Yesterday, the expectation overall, the primary expectation is for the market to actually fall back into the prior range, potentially run into some support at the 87 as you see in front of you. If the image in front of you does not seem clear or it seems fuzzy or whatever, make sure you hit this thing right here, this little settings wheel. Click on that and make sure you set it to 1080p so you can get the clarity. Okay. But overall, expecting it to fall back into range, and really I projected a test up before a push down. And so I kept the range conservative for NFP Monday, or the Monday following NFP. And so I didn't expect much range, which was completely wrong. The market actually drove lower. In either case, I expected it to fall lower as opposed to a gap and go. You know, we've had these gap and go situations all along. The expectation yesterday is we're likely to fall instead. So here's what happened. We open, we push lower immediately. We get into the prior point of control, rotate back up, attempt to push back out of the range, and then we get this impulsive move down, quite sustained, pretty good delta. And then from there on out, any pullback to the mid right here would look to set up a short. But this thing was grinding up into the mid, um, into the close, and provided a poor setup for that. Looks like my OS is off here. So overall, we ended up with a double distribution profile yesterday, with the point of control remaining in the upper distribution, with the mid also having the point of control, low volume node, and IB low all in the same spot. This would have been an ideal situation to take a short. Um, it did push higher overnight. You can see that it squeezed up to the point of control, 29.85 on the overnight high. But the overall description of what we got yesterday is that the market was in price discovery mode and had tested um, above and below the prior range. And so it's really breaking away from what was balanced. So you can see the prior day we had complete balance, and we did pull into the point of control and attempt to push higher. But what we had yesterday is a market that closed right in the middle. So the close of yesterday and the close of the day before are pretty much in line. They're off. I believe the close to close is in the ES the difference is only 2.25 points. And then from there, I expect the continuation of this impulse up, although the pullback seemed a little deeper than expected. The volume yesterday was okay. It was just under 1 million contracts, which is what we expect. We expect about 1.2 million at current statistical price, statistical review on the RTH volume. The overnight session, as you can see here, kind of climbed up to the point of control, but overall ultimately ended up accomplishing this lower low, although we still need to see that happen during the day session. The profile overnight is a price discovery profile, fairly balanced in the middle here, but I'm not seeing a very clean, clear excess high or low. And so it's to me, it looks kind of weak. It looks like it is likely to continue discovering lower this morning. This is Tuesday, so it's likely to be a little more volatile. You know, there's this thing called Turnaround Tuesday. I haven't studied it, so I don't know what its statistics look like, but in general, Tuesday, I know that statistically speaking, testing ranges, Tuesday is one of the widest range days historically of the week. So I expect a fair amount of activity today. I expect it to be a fairly active market. Looking at the heat map here on ctbookmap.pro, we did push down into where we turned around yesterday. We had this liquidity sitting here from the prior session, which caused a collision in this area. So we have a classic collision pullback continuation. This would have been a scalp short right here, a scalp short setup for me right there. But other than that, I'm not seeing anything too dramatic here. In terms of what the market's intentions are. Now, 2980, 2980.50 is going to continue. It's a stock zone for me. So you could see that I have these gray bars right here for these stock zones. It's a stock zone for me. It's an important area to watch this morning, and I'll continue to do that. It does have a fair amount of recent liquidity, not something that's been there for long, but overall, right in the middle here, you can see it's just dark matter around the market. There's not much in terms of commitment in either direction until we get down into this 29.65 to 93 63 area. Um, so that's how things are shaping up. Beyond here, let's look. We have a full depth, so let's take a look. Beyond here, what do we have? Not too much until we get down into the mid-century figure at 29.50, which you can do today. I mean, we're at 71. That's only 20 points away. It's well within range, but that's the next big area of liquidity. And interesting to note, we've had this 29.90 liquidity up here since last week, which got taken out yesterday in the overnight session, and the high of yesterday is 90 and a quarter. So the prior day's high, the prior high a day is 29.90, and then we got this liquidity just below it at 29.86, and you can see that liquidity move right there, right there. So a stair step down. This is a motivated seller here. I expect that any push into 29.80 is likely to get a rotation and a greater potential of a more profitable short setup. Do you see that? I hope you guys see how that works there. Anyway, in terms of what is expected for today, now that we've gone through the review, one of the biggest things to remember is that we do have a gap below that's been here. Let me turn that on. So there's the gap zone right here, gap zone mid at 51.75. The expectation this morning as we come in here is an open auction that reverts back, that attempts to be responsive. I'm looking for it to push back. I don't expect it to get back into the 80 area before it squeezes down, takes out the overnight low, and starts working its way through the gap zone with a target of this 51.75 before the bounce potentially. Not sure. I'm happy if it keeps going through the gap all the way down to 29.50 where the next liquidity pool is. But my anticipation is it's likely to squeeze its way through and then bounce back up somewhere ahead of or around the 51.75, maybe even 54. So that's responsive buying to fail. If it fails, and we see that failure in the order flow and we hit the bid, get short, then we want to hang in there. Our goal with this line is not to predict what the market will do, but our goal is to hang in there. If we get into the gap zone, this is a kind of a vacuum in the auction, dead space in the auction. And so once we get in, we want to hang through the gap zone and let the market kind of discover as much of that gap zone as possible. Remember, a gap zone represents a recently undiscovered area or unauctioned area, and it's likely to trickle through there. The secondary is that the market does what it's been doing a fair amount of. Open, we do have a weak overnight auction so far. Open, push lower, and then impulse up, and then work its way back to 29.80 for the rotation, consolidate, and then squeeze into the point of control from the prior day and rest or hold steady at 87 to set us up for another short squeeze higher into 3,000. We're very, very close to the 3,000 figure. We turn around in the 29.90, 91 or so area. But the effect of if we do open up and if we do open and drop and we have an impulse up, then I'm going to look to ride that impulse up, find a spot to get long, ride that impulse up into 29.80 for rotation. And then once it breaks 29.80, if it does, I'm very interested in 29.80 on the short side. This is not a trade recommendation, but this is what I'm looking at. But if it breaks through, I'm looking for a pullback long into the point of control from yesterday. I know that's a lot of detail and that may confuse a lot of people, but just hang in there if you're new, and it'll start to make sense soon. Hopefully I'm coming through loud and clear to you. One thing I announced yesterday that you may have missed, I want everybody to not forget that rollover is Thursday. Official rollover is Thursday. A lot of people don't roll into December in the U.S. indices until Friday or even Monday, but I move over on Thursday to the new contract, so I'll be quoting the new contract on Thursday. Don't forget to re-download your data and adjust it for the premium. I'll post the premium as I always do here and on my Twitter feed. And again, I will start quoting December from Thursday onwards. Good luck today. Remember to define the risk for each and every trade. Define how much you're willing to give up for each and every trade and make that a reasonable amount versus your account size and versus the target that you have so that you can be here day after day after day. Good luck.